Hi everyone. Thanks for dialing in tonight. We will start in a few more minutes as we allow others to come in, and so just sit tight, and we'll start very soon. Thanks. Okay. Hi, everybody, again. Thanks to those who dialed in early, and welcome to those who just came in. Tonight's webinar by Stashaway will be talking about how to unlock the true potential of your cash. And before I go into it, a quick introduction about myself. My name is Albert, and I'm the Deputy Country Manager here at Stashaway. Been with the company since we first started here in Malaysia, and I prior to Stashaway, I come from an investment background. So I've had the opportunity probably to speak to some of you over the years when we have done events. So happy to continue that through events like these online or also in person when we do those kind of events. There's not only me today. There's going to be Wong, who is from Principal Asset Management. Wong, can you? Yep. I'll leave it to Wong to do a quick introduction about himself before we dive into the meat of today's presentation.
Okay, sure. Thanks, Albert. Can you hear me clearly?
Clear, clear. Yep.
All right. Okay. Yep. Thanks for the introduction. Okay. My name is Wong Luk Chin. I'm actually the Chief Investment Officer, Fixed Income Malaysia, and I've been with the company for more than 20 years lah. With Principal, I think prior to Principal, we were known as CMB Principal. As you know, there was some change in terms of the shareholding structure in back in 2019. So I've basically worked through those period. And prior to that, I was actually with CMB as well, in the Treasury Department, and with a few other insurance companies, mainly uh, looking into investment of bonds lah. Yeah. So yeah,
Yep.
back to you, Albert.
Yep. So we have a very seasoned fund manager here who have many, many years of experience within the fixed income space. So I guess before we start, I just wanted to do a quick litmus test on to see, what's everyone doing right now with their excess cash, right? And I have a code here that you can scan, and just feel free to post the what to share a little bit more about where are you investing your excess cash today. You can either go through Slido, key in that number 6654339, or you can just use your phone if you are in front of your laptop to scan and see where are you investing your excess cash. So I'll just this is just to kind of get everyone kind of in the mood of things before we really dive in. And then as you key in, you can see also the results lah. I'll pause for a while to allow all of you some opportunity to key it in. So you can key in multiple options. There's as many as you like. Feel free to share it, and then we'll see what everyone is kind of investing into these days in terms of your excess cash. Okay, see some results coming in. I won't need to share actually, let me just share my screen so some of you can see what is the results like. Let me just change it. Yeah. So this is what's coming up in terms of results, and surprisingly, I guess quite a number of you are investing in Stashaway. So thank you, thank you so much for, I guess, for the support. I also do see that there's kind of a mix in terms of areas in like stocks, putting your excess cash that you have in terms of into the bank FDs. I see crypto, and I see money market funds, Fund Supermart, some unit trust funds, Touch and Go, Go Plus. So quite interesting. I guess a few more things, a few more entries are coming in from people, but very interesting to see how people are allocating their cash these days. For those who are new, I guess these are the various options in terms of how you can consider putting your excess cash. Um, there's no right, no wrong, but hopefully later I'll be able to give you a framework of thinking how to go about firstly deciding how much to put set aside, and what else should you do in terms of excess cash. Okay, so going back to the presentation itself, just give me 1 second. All right. Okay, what we're going to go through today. Right. Today we are going to be just going to kickstart it with a quick introduction about Stashaway in case this is the first time that you are hearing about us or you know something about us. I'll be talking also about what options you can do about your cash in today's environment. And then we have Wong from Principal who will be sharing a little bit more about the principles of Malaysia outlook covering the economy and interest rates. And then we'll go into Q&A. So as we go through these things, if you have any questions, whether it's relating to Stashaway or just in general questions for Wong itself, feel free to post them in the Q&A box. We will get to it afterwards at the end of the session. All right. Okay, so a quick introduction about Stashaway itself. Stashaway, we have been live since 2017. Actually, we first started in Singapore and then we launched into Malaysia. Besides these two countries, we are also present in three other countries, namely Hong Kong, Thailand, and Dubai. And since the inception, what our aim is trying to do is to make investing intelligent, make it simple, and make it cost effective. So, for those of you who have been around investing probably in existing funds, it can be a bit cumbersome, but we're trying to kind of make it very, very simple, easy to use, and very transparent. So since 2017, you can see some names that have backed Stashaway over the years, and also along the way too, we have won a whole number of accolades from different parties. So I won't read it through, but you can see for yourself there. In terms of Stashaway, what is available on Stashaway itself is kind of three different segments. I will call it firstly on the left hand side, you have your core portfolios, which is how we would like many of our clients to think about from an investment perspective. That would be your anchor when investing into Stashaway. So what these are really diversified portfolios that give you exposure all over the world. And the most popular one is called our general investing portfolios, and that's one powered by Stashaway, and there's also another one powered by BlackRock. Then there is also what we call custom portfolios, where it allows you to choose and tailor make your own portfolios if you want to say get exposure to the S&P, or if you want to get exposure to Bitcoin, for example. And then on the rightmost side, if you want specific exposure to thematics, so certain sectors such as technology or healthcare, or if you are very into green investing, there's the environment portfolios too. So those portfolios on the right ideally should have I guess a smaller weightage because they're a bit more specific or niche to a certain sector. But those are thematic portfolios. Today's focus is actually going to be a little bit more on will be focused more on the cash management side. It's actually showing you or sharing you how you can grow your short-term savings, and that will be through two things called Stashaway Simple and the USD Cash Yield. Okay, so why today's focus about cash management, right? For those of you who may have been following what's been going on in terms of the world itself, there's been a lot of turbulence. There's been a lot of concerns raised, maybe coming out of more so coming out of the US. That's where a lot of the noise is happening. But also to a certain degree, maybe there's been some concerns about the Malaysian economy here. So a lot of clients came to us in Stashaway to ask, what should I do about my cash now, right? And hence this webinar kind of came about. And what can you use your cash for, right? Two things really. One for managing your own expenses and emergency, and the other one would be more of using cash to navigate market uncertainty, which is where really a lot of the questions that we get from clients come about. So, on the first part, just kind of going step by step in terms of how you should think about using cash for your own expenses and emergency. Um, Firstly, coming to your own expenses, right? We from a day-to-day basis, we need to use cash, spending it on various things. So, how much cash should you allocate for your own immediate expenses? Typically, rule of thumb is about 1 to 2 months. That's on one side, and then if you have emergency, you could end up in a medical situation that requires you to pay a significant amount of money out, and that's where your emergency fund would come in. Or maybe if there's a risk of you being laid off from your job, that 6 to 12 months rule of thumb for your emergency fund would give you the necessary buffer to kind of ride out through that period as you find a new job, for example. So this is kind of at the very basic level how to think about using cash to fund certain immediate expenses or your emergency fund, right? So when it comes to investing into a cash management solution, right? Then what would be the most important feature for you? This is another uh, question that I'd like to pose with you all. So if you go to the QR code again, you put in there, use the numbers 6654339 to go back in again. You, as per before, just key in what most important feature are you looking for when it comes to storing your cash, right, in some place safe. So a pause for a few, maybe 30 seconds or so for you all to put in your answer, and then I'll share the screen to see the results. Okay, I will switch the screen. All right. So Important feature for your cash management solution. So the most apparent one is liquidity. We have good liquidity and good returns. That seems to be the two things that stand out. Actually, good returns now seems to be the one that's standing out really. I also see a few other things in terms of beating EPF return. Ooh, that can be tough for this purpose specifically. We have low management fees, safe and protected, um, low risk, easy withdrawal with no fees, immediate use the same day so you can easily access it, and I guess ability to compete with ongoing inflation. So that's one thing that I will also cover later on. Okay, well, thanks for inputting that. Now I'll kind of go through from at least from my perspective how I think you should go about thinking when it comes to your cash management solution. So a couple of things. I think there's quite a bit of overlap in terms of what was inputted into the screen versus what I have here. So, we have among top returns, low risk, liquid, no minimum or maximums, and no T&Cs. So, explaining a little bit more about what each one of these are. I think among the top returns is self-explanatory. We want to get the best returns out of our cash management solution. We want to have the lowest risk. That means that the value of it doesn't drop when you need to withdraw the money for whatever purpose, emergency or for your own monthly expenses. Or the next one would be in terms of liquid. So there's no lock-in period. So whenever you want to have access to your cash, you can have it anytime. You can save it for 1 month or up to 12 months, entirely up to you. The next one, no minimum or maximums. You want to put 100 ringgit in, that's fine. You want to put a million ringgit in, also fine. There ideally shouldn't be any cap on how much you earn. And lastly, no T and Cs lah. So it shouldn't be two owners of a condition where you have to jump through many hoops just to get the best return, for example. So this is how I look at it in terms of a framework of thinking about what is ideal for you from a cash management perspective. And just to share in terms of what is available out there, right? And obviously, I've used those elements that I've shown in the previous slide, and I'm going to compare the different options that's available out there. So naturally, it is from a Stashaway simple perspective. This is where we stand in terms of our portfolio. Stash very simple. It is liquid, meaning you can take out anytime. There is no minimum or maximums. There is no T&Cs, and it is low/medium risk. I'll come to the risk part later to explain why it is low/medium. What other ways can you put your cash out there, right? So savings account, I think that's the most basic thing. The returns on that is 0.25%, not great compared to say Stashaway Simple where the projected return is about 3.6. It is liquid, yeah, no minimum maximums T&Cs, which is great, and it's also low risk. So in terms of those criteria, it is great, but the only, I guess, the downside is that the returns are much lower lah. And so this is what you get from a bank savings account. And then we have fixed deposits, right? So fixed deposits, very straightforward. I'm sure many of you know what it is. Is it liquid? No, because there is a typical lock-in period, whether you're putting in a fixed D for 3 months, 6 months, 9 months, or 12 months. There might be minimum or maximums imposed depending on which bank that's offering it. Typically, there are no T&Cs and also generally low risk lah, because it's with the bank. And then you have fixed deposits where there's certain promo rates. So in certain times of a month or a year, there can be certain promotional rates in terms of FDs by banks. Similar to FDs, the FD itself, the third one in the middle, it's not liquid because there's a lock-in period. There might be minimum or maximums. Typically, there are T&Cs, so maybe say fresh funds only. So the rate only applies to fresh funds and generally low risk. And then from a FD campaign, sometimes certain banks might do certain special campaigns. The return is higher, obviously, but then the tricky part is when it comes to things like the T&Cs, where it requires you to put in certain amount of money into the current account. Then the real return of it is actually much lower than 5.08%. It's not liquid because There's a lock-in also that period that you have to go with. There might be minimums and maximums associated with it, but the risk is also low. So these are generally the various cash options out there. And where I've gotten all this is just purely based on a quick Google search on Maybank itself. Maybank, what they are able to offer out there, whether it's their fixed deposits, their promo rates, or even the specific campaign. So obviously, coming from Stashaway, we feel that Stashaway Simple is a great way for all of you to get access to among the highest returns, not the highest returns, but among the highest returns, whilst having easy access to your cash, so you can always tap into it anytime. There are no T&Cs. There's no minimum or maximum, so you can always, you put in as much or as little as you want. In terms of the risks, as I mentioned earlier, where it's low/medium, that then comes to where it is invested into, right? What is inside Stashaway Simple, which is the next slide here. What does Stashaway Simple do? On the right hand side, there will be two funds, which Stashaway Simple is invested into. So Principal Islamic Money Market Fund, which is where Wong here from Principal, his team manages that fund. 80% of it is in there, and 30% is in another Eastspring fund called the Eastspring Investments Islamic Income Fund. The projected rate on the whole Stashaway Simple is 3.6%, and it's low to slash medium because they invest in bank deposits, which are typically very safe. The slightly higher risk is like medium risk is because they invest in short-term bonds, more specifically from the Principal Islamic Money Market Fund. The liquidity in that, if you need to access Stashaway Simple, is 2 to 3 business days. But despite this, there is no lock-in period, so you would get back your money within that time. And you're investing into ringgit, in your ringgit, so there's no FX conversion, and we charge a fee of 0.15%, which is the 3.6% projected rate, which is net already of that fees. So typically, people use this more from a liquidity perspective to manage their cash, and just get their cash to work harder rather than just leaving in the bank account doing nothing. And so this chart here shows you how the historical rate for Stashaway has been. We can't guarantee returns, but overall in the past 1 year, it has been hovering around 3.6%. There are some months where it will be lower. There are some months which will be higher because, as you see here, the bank deposits sometimes when they mature, then they get renewed at potentially a higher or lower rate, but it's been around 3.6%. Okay. So the second part, which is where what you can use your cash for, right, is to navigate market uncertainty. And this is going back to what's been happening in the past, I guess, past few months since the start of the year, where clients have been asking, how do I manage my money given all the things that have been happening in the world? So if you look at the S&P 500, this is, if I presume what everyone here wants to have exposure to investing overseas. The S&P 500, which is a representation of the US stock market itself, is probably one of the key metrics that you might compare global investing to. So this is the S&P 500, the price chart over the last 1 year, and there's is it's choppy, it's up and down. Along the way, there will be many events that happen over the years. Whether, last year we saw the Bank of Japan hike interest rates for the first time in 17 years. That caused a big market drop after that, but generally market recovered. We saw Trump win elections in about October, November last year. Market rallied. On top of that, we had also seen the introduction of DeepSeek, which I'm sure many of you here would have known about. That caused a bit of a concern over a short number of days too, when people started questioning, should I be investing everything into Nvidia, for example, when suddenly at the other side of the world we have this Chinese AI company coming out with a model that is much cheaper than what everyone else is doing. And more recently, in the month of April, which is where we've seen a big drop in the S&P 500, we had Trump coming out with his tariffs on various countries around the world, and that was termed Liberation Day. But since then, the S&P 500 has picked up, and yes, I think the reality of investing is that it's never a straight line up. There will always be ups and downs in the market, and understandably, that can cause a lot of panic, worry, and uncertainty when it comes to putting your money to work. And so what we have come out to tell clients is that if you're invested, ideally you should be you should stay invested, especially you're doing over the long term. But if you prefer to 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 kind of sit out through certain short times where there's extreme volatility and extreme panic in the market, then that's where things like Stashaway Simple will come in, because it's a good way to park your cash while you ride through the volatility. And there's also this thing called USD cash yield, which I'll explain a little bit in the next slide, where you can park your cash in the form of US dollars. So on the left hand side, you have parking your cash in ringgit. On the right hand side, you have parking your cash in US dollars. And so the chart that you see on the table you see on the left hand side is similar to what I've shown earlier. But the one on the right hand side, USD Cashew, is the one that if you want to put your money in USD, then that's where it would be a great way to be like as a safe haven, especially in your investing overseas, right? Because you're typically if you're investing overseas, you'll be investing in US dollars, for example, and this is where it'll be very helpful to park your cash in a safe place. So where it differs between Stashaway Simple and USD Cash Yield is on the currency itself. Firstly, so one is ringgit, the other one is US dollars, and the projected rate for Simple is 3.6. The USD Cashew is 4.3%. It's medium risk because there is a certain element of foreign currency inside where your ringgit is converted to US dollars. So depending on what the currency foreign currency exchange rate is, then that is a risk. So when it comes to investing or putting your money into USD cash yield, if you already have US dollars overseas invested through Stashaway, then that's fine. There's no direct USD or foreign currency impact onto USD cash yield. Liquidity is similar in that if you need to withdraw 2 to 3 business days to get your back your money, the fees are a little bit higher for USD Cashew at 0.3%. And what USD Cashew invests in really are 0 to 3 months US Treasury bills. So these are as close as one can get to US dollar fixed deposits in a very convenient way on Stashaway's platform. So say for example, you have your investor through Stashaway where you have US dollars, a general investing portfolio where the ETFs in the underlying are all in USD. Then if you're concerned that market is uncertain, you unable to tahan through the short-term volatility, this is a kind of a great way to park your cash whilst waiting for things to pan out, and then you can redeploy back into your other investment portfolios over time. So this USD 0 to 3 months treasury bills are very short-term in nature. So it's 0 to 3 months government bonds by the US government, where they return about 4.3%. Okay, so that's kind of two ways to go about using or thinking about cash management to navigate through market uncertainty. One is through Stashaway Simple if you want to keep it in ringgit, and that could apply to investing in Malaysia. The other one is USD Cashew is if you're investing overseas, then that exposure, maybe you don't want to have exposure in equities or bonds, then that can be held as cash in USD Cashew. So that's it on my part. I'm going to pass it on to Wong's side now, who's going to share a little bit more about Malaysia. There will be an element, I guess, in terms of how interest rates here in Malaysia affect whether Stashaway Simple, and also an element in terms of how what's been happening overseas have broader implications on the ringgit or US dollar. Okay, to you, Wong.
Okay, thanks, Albert. Um, Perhaps should I pause to maybe see whether there's any questions, or do I
I
just
think we'll
continue
take the questions later on.
later lah? Okay,
For everyone who's listening, feel free to post any questions, whether it's about Stashaway or for Wong himself, regarding what he's going to be speaking about, and we will get to them afterwards.
sure. Okay, thanks, Albert. Okay, good evening, everyone. I guess after listening to what Albert has presented just now, I think where I'm coming from will be talking about what would be the interest rate outlook, right, for Malaysia over the next maybe 6 months to 12 months, looking into the economic outlook, right, that I think we've have to monitor, lah, right. First of all, we do know that Bank Negara main objective is actually price stability, right? And then the other one would be the sustainable growth lah. So they just basically want to maintain growth stable, right? So that's where we have to really look at what are the complete implication lah, in terms of where Bank Negara will make a decision in terms of their interest rate, or rather the OPR lah. Okay. Um, Slide 33, please, Albert. The next 33. Yep. Okay. Now, I mean, prior to all these tariffs uncertainty, the macro indicators have been pointing towards a stable data, right? I mean, our forecast has always been, relatively within the government or Bank Negara projection. For example, real GDP for 2025, our earlier forecast was actually 4.6%, and our OPR indicated earlier was actually at 3% for the rest of the year. But because of all these uncertainties, uh, bring about by the Trump tariffs, that has actually resulted in a downside risk to all these numbers, particularly our real GDP number. As you know, Bank Negara already indicated during the release of the first quarter GDP number, which came out at 4.4% year on year. They highlighted that there's a downside risk to the growth for 2025. They have also indicated that they will be revising their projection in terms of the real GDP. Earlier, they were projecting the growth to be between 4.5% to 5.55%. So they are obviously assessing the impact, or rather the potential impact to the growth, and there's a high likelihood that it will be revised lower in terms of the range. Similarly, OPR, I think I'll touch about how we are projecting OPR over the next 3 to 6 months. As I think a lot of you may be reading a lot of the reports indicating that the market is obviously pricing in a OPR cut, right? Particularly in the next meeting in July, right? But before that, let's move to the next slide, please. Right, just a key highlights for the first quarter of 2025. Now we know GDP grew 4.4% for the first quarter, right? And the headline inflation for the first quarter has been fairly stable at 1.5%. March was only 1.4%. So we are seeing the inflation to trend lower. Same goes with the GDP number lah. Now unemployment rate is at 3.1%, right? And our ringgit has been very stable against major currencies, right? Obviously has been appreciating against the US dollar. I think it's typically US dollar has been the one weakening against all major currencies because of all these uncertainties, right, in the US. Right. Next slide, please. Now, like I indicated earlier, GDP has been trending, lower since the second quarter of 2024, from 5.9% down to 4.4% year on year. This is on a quarterly basis. Now, but you look at the quarter on quarter seasonally adjusted basis, the economy actually rose 0.7% in the first quarter, as compared to a contraction of 0.2% in the fourth quarter. So it does seem to be, doing better, right, quarter on quarter, right? But it's just that the year on year basis has actually been, on a moderation mode, right? So what have been the main support of the growth? It's basically the consumer demand. Domestic demand has been the main driver, and then we are seeing a moderate in terms of the net export as well, as compared to the previous quarter, right? Maybe the next slide I can probably explain further as well. Yeah, if you look at the key driver for the first quarter of GDP 2025, private consumption, overall we are seeing a broad moderation in terms of all the data, right? Private consumption, private investment, even the public consumption, except for public investment, which seen an uptick as compared to the prior period, lah, right? So overall, it's a broad moderation, and we've seen mining and construction actually drop significantly lower as compared to the previous quarter, lah. So what does that indicate? Are we seeing a slowdown moving into the second quarter and third quarter? Now we know the net exports, potentially it has been a front, there could be a front load, right? Prior to the announcement of the tariffs during the Liberation Day, right? So first quarter potentially we could see a front load, and hence that's why you are seeing a net export of about close to 4.2%, right? Second quarter, now we saw the latest number in terms of for April, where export was actually much higher than the consensus. Export actually grew 16.4%. Market was only looking at 6.8%, or rather, March was actually 6.8%, right? So, having said that, I think we are obviously looking at exporters, even imports rebounded to 20% as compared to a drop of 2.6% in March. So what I'm saying is that a lot of exporters and importers are basically front loading, right? Because of the pause of 90 days since the 9th of April, potentially until the 9th of July, right? We basically may be seeing a lot of front loading of trades, right? Especially in the second quarter. Are we seeing perhaps a better number in the second quarter? It's hard to tell. We never know, right? But I can safely indicate, first of all, domestic demand will be the main driver for Malaysia growth, right? Net export is going to be a big question mark, uncertainty because of all these tariffs, war or trade wars that are going on currently, right? Now we're not sure whether third quarter, whether there's going to be any resolve, any positive impact to all these uncertainties. So I think we just have to wait until everything is being finalized, right? Having said that, even the China-US deal that has been paused for another 90 days, that could potentially prolong because negotiation may actually take longer than expected, right? So that's where the market is obviously a bit jittery in terms of what would be the growth expectation in the, especially in the second half of this year, yeah. So I think, yeah, maybe next slide, please. Now the other thing that we are obviously monitoring will be the labor market, right? The labor market conditions in Malaysia has been very has improved a lot, right? Unemployment, like I mentioned earlier, dropped to 3.1%. It's been hovering about 3.2% for the last 3 quarters, right? First quarter, 3.1%. Employment has improved, right, to 16.7 million, right, in the first quarter as compared to only 15.5 million. Now the labor participation rate has also increased to about 70.7%. Now, despite the increase in the participation rate, our unemployment actually dropped. So that indicates that employment has been strong, right? Now, then again, if you look at the wage growth, private sector growth in terms of wages have been increasing, right, to about 3.3%. Real wages is about 1.7%, right? Despite all this growth in terms of wages, our headline inflation and core inflation has been very stable. There's no concern in terms of any spike, right? Especially core inflation, right? We know when there's a strong wage growth, typically core inflation will be a main concern, but it's just hovering about 1.8, 1.9% overall. Yeah. Next slide, please. Now, because of all this uncertainty and also the expectation of interest rate cut, we've been seeing the interbank rates falling. There's a decline lah, a small decline during the first quarter, right? But even a drop in the first quarter, we are still, if you compare it against maybe the third quarter and second quarter of last year, it's still within the same range, right? So I think it's just because of the increase that we had in the fourth quarter, right? But having said that, there's already a price. I think pricing in of IRS cut, basically pricing in of a lower IRS for the next, second half of this year and even next year as well. So, but what I'm trying to indicate is that when market is pricing in a lower IRS, right? Obviously, the market is taking a bet that Bank Negara will actually cut interest rate in the second half, right? And if you look at the right diagram itself, following the MPC meeting, right after the announcement of Bank Negara maintaining its OPR unchanged at 3%, Bank Negara actually cut the SRR by a massive 100 basis point, right? What does that tell you? So in fact, it's basically indicated that they just want to increase the liquidity to the market, right? Now you can see from the chart itself here, the light blue color, there's a drop, right? That's the money market borrowings, right? And also basically there's a drop in terms of the repos and the BNM debt securities lah, right? From fourth quarter of 2023, right? From up until first quarter. So maybe perhaps because there's a drop in liquidity, they Bank Negara decided to actually pump in more liquidity to the market lah, right? By lowering the SRR by another 100 basis point, they actually increase or release approximately 19 billion worth of liquidity to the banking system, right? And that, I'm not sure. Obviously, Bank Negara has indicated that it's not a sign, right, that they will actually cut interest rate, cut the OPR, but they just want to make sure that there's ample liquidity. But obviously, market is not. I mean, it's taking it differently, lah, right? Because those traders in the market are looking at it as potentially Bank Negara would have to cut interest rate, right? So I think that's something that we are monitoring very closely, lah. Yeah. Okay. Next slide, please. Okay. I think just moving back to growth, our real GDP growth expectation. Now, definitely we will potentially see export to moderate, right? We've seen an increase in terms of the E&E sector supporting the export, but because of all these tariff uncertainties, potentially we could actually be seeing, especially in the second half of the year, if we don't see any resolve or any positive, resolution lah from the tariffs negotiation, there could be a risk of export dropping significantly in the second half, right? That could actually drive our second half real GDP number lower lah. Now, but looking at on the right side of the table itself, expansion of tourism obviously is going to support export, right? Now we've been seeing a very strong or rather increased arrivals by nationalities lah, right, over the past few months, especially when you compare it with 2024, right? 2025 we've been seeing increase across all the nationalities, especially within the Asian countries lah, right? Inbound tourism has actually sustained the support of exports for 2025. If we are, or rather, if Malaysia is able to maintain the growth or the expansion into tourism for the rest of the year, or perhaps into 2026, there could be a counterbalance in terms of the slower export growth from the E&E, right? So I think something we also need to look out for, right? Despite market already pricing in a slower growth and also a rate cut, right? Next slide, please. Now, so that's I think the main question will be what would be the expectation of Bank Negara. In May itself, Bank Negara has really maintained its OPR unchanged, and also reiterated that it is supporting the economic growth, right? But obviously, the main uncertainty towards the tariffs will basically drive the market towards expectation of a rate cut, right? And we know inflation has been stable and is actually a non-concern for Bank Negara, right? Now, I've actually shared a diagram. Next slide, please. To in a way highlight, right, the movements of the OPR historically from 2003, and also the changes in terms of the Malaysia real GDP growth, right? The darker line is obviously the black line is obviously the OPR rate, right? The blue line is the quarter number, basically on a quarterly or on a quarterly basis. Whereas for the yellow line is the average calendar year period, right? Now, what I'm trying to highlight here is, especially during the 2019, towards the 2019 period, right? Um, I'm not sure whether am I able to pinpoint, Albert? It's okay, doesn't matter.
I can do it for you.
Okay. Yeah, somewhere here. Correct. So you can see that 2019 itself, growth was seen trending lower. Fourth quarter GDP number was actually at 4.5%, or rather 4.4%, somewhere there. Now, first quarter 2020, okay, first quarter 2020, our GDP number was actually moderated to 3.5%. So there's a drop of real GDP number for first quarter in 2020 to below 4%. Now, of course, we know first quarter number will only be released probably in April or May, right? Most likely in May 2020, right? But Bank Negara actually cut interest rate in the month of January, right? So what I'm trying to explain here is that they obviously feel that growth expectation uh, moderated, right, towards the end of 2019, and they have no choice but to cut interest rate, because they are aware that the growth expectation in 2020 is going to drop, right? That is obviously before COVID, right? Now, after COVID period, March and April 2020, Bank Negara has actually cut interest rate down to 1.75, right? So in conclusion, similarly to what we are seeing now, first quarter GDP number is 4.4%. Now, are we seeing a drop in the second quarter, or perhaps in the third quarter? Now, Bank Negara next meeting, MPC meeting, will be in July 2020, in the next 2 months, in July 2025, right? They would have ample of time to monitor what will be the data that will be out for the month of, let's say, April, May, and June for the second quarter growth, right? So that's where I'm trying to indicate is that, assuming if we continue to monitor the month-on-month movements of the data, especially the trade, inflation, and any other economic data that's coming out over the next 2 months, if an indication is seen that our economy is slowing down, I think market will obviously price in July for Bank Negara to cut, right? Already, I think if you look at the market commentary, a lot of the reports, there's a higher probability of a July cut, around 30% to 40%. So I think that's the reason why I think market, especially bond market, has been fairly strong over the past 2 to 3 months. Yeah. And next slide, please. So what I'm trying to indicate here is that Asian interest rate, especially high real rates lah, remain positive, remain high, as compared to the average of 2010, right? So this is basically an indication that most of these Asian economies have room to actually cut their interest rate lah. That includes Malaysia lah. You can see Malaysia has more than 1% real rates as compared to the average of 20 since 2010 lah, right? So all the countries obviously has room except for Taiwan lah. Taiwan is obviously zero there. You have China. China has been continuing cutting rates, right? And then recently we had Thailand. Yeah. Next slide. I probably won't go through much about the budget. I mean, these are all data. But I mean, what I'm trying to indicate here is that the government is committed to actually reduce the budget deficit, the fiscal deficit, and that could actually pose a positive impact to our credit rating lah, right? We know Fitch downgraded because of the concern with the rising funding requirement, the rising deficit back in, I think, if I'm not mistaken, 2022 or 2023. But if we are seeing a better fiscal number, an improvement, and with the commitment by the government to actually reduce it to 3.3% in the next 2 to 3 years, hopefully we could see Fitch actually upgrade our rating back to single A minus lah, right? We know Moody's and S&P has actually maintained it at single A minus or A3, and yeah, hopefully that could actually see a better flows into our economy, and eventually that could also improve our currency performance lah. Next slide. Yeah, not going to go through much. Just one thing to note is that because of the falling deficit, the fiscal deficit, government issuances will be much lower, right? I think that is also one of the reasons. Supply is limited. Even the corporate bonds issuances are limited in the market. Hence, I think with the high liquidity that it's moving into the our market itself, that has actually drive bond yields lower, right? And then also obviously drive the performance of most of the bond funds better lah, right? Next slide. What I'm trying to highlight here is that for obviously bond market, conventional, and also the sukuk, we are well supported by local institutions lah, right? Especially EPF, insurance companies, and all the banking institutions lah. So I mean, with the ample liquidity, ample support from all these local institutions, our fixed income, funds have been, fairly stable. I think one thing is that we don't see those kind of volatility that we are seeing, in the global bond market. You're seeing US Treasuries being sold off, right? From sometimes to about 4.7 at the early part of the year, now hovering about 4.5 level. At one time, it went to about 3.8%, right? So I think there's a lot of volatility in those kind of global bond market, but in our market, because of all this strong support, the domestic market is fairly less volatile, I would say, insulated from all these uncertainties. Yeah. Next slide. Okay, near-term outlook. I think first of all, the US so-called tariffs will be the main talking point for the next maybe 3 months to 6 months lah. right? Until they resolve all this, until the trade wars are gone, I think we will obviously going to see a lot of volatilities, right? We did indicate that the market weakness will be temporary, right? But of course, it's going to be all depends on the fundamental or the strong, I mean the economic data that's going to be released over the next 3 months to 6 months. That would drive the market performance lah, right? But I think one thing to note, there's always going to be the downside risk to growth because of all these uncertainties, right? And if you ask me, the direction of the monetary policy in Malaysia obviously largely depends on the completion of the tariffs negotiation lah, right? Like I indicated earlier lah, any further drag will obviously push Bank Negara to actually ease, right? Potentially just cut interest rate lah. Yeah, I think that basically ends my presentation. Yeah, over to you, Albert.
Okay, thanks, Wong. So I guess maybe I know you have like this summary slide here, but if I were my key takeaway from what you were talking about earlier is that for now the Malaysian economy is still doing somewhat okay, but there is also a risk that the I guess more from an exports perspective that we might take a hit lah, and that would affect our country's growth. Why that matters is because going into the second half of the year, Bank Negara will obviously be looking at the health of our of our Malaysian economy,
Yep,
and if things does take a bit of a beating there, then they might, in anticipation of that, decide to reduce interest rates.
yep,
There'll be kind of a good way to summarize what you think
yep,
about
yep,
Malaysia.
yep.
Okay,
Correct.
so this I guess there is a chance of potentially lower interest rates coming on going into the second half of the year, and I guess from a cash management perspective, this is something to be aware of too lah. Let's kind of skip the next few slides here. These are from principle, but yes. Um, I know we had a small question earlier, but before I go to if any of you have extra questions, just feel free to post them in the Q&A box. But maybe before I kind of end it, because as we are near the end of the presentation, I'm sure many of you have heard about what is cash is king, the term, and given what's been happening recently, it's you want to just hold cash, right? And that's fine, more from a shorter term perspective to ride out the volatility that we've been seeing. But note that being comfortable with cash is one thing, right? This is how the graph will look like if you were to invest or set aside $1,000 for the next few months, for the next 20 years. And if that is giving you a return of 2.5%, you have about 310,000 at the end of 20 years. But don't forget, don't be too comfortable with cash, because there's this thing called inflation. Right? Inflation is going to erode the value of the cash that you hold, whether it's in the bank or in anywhere where you just don't really put it to work. And if your fixed deposit is giving you 2.5%, but inflation is giving you 2%, net you're getting only your real return is only about 0.5% per annum, and that really decreases the return that you get over that 20-year period. So hence the importance that I guess we as Stashaway always, I guess even for Wong's case, will want to emphasize the why long term or investing should be the key focus here, right? Why you're investing is to generate the returns that's able to beat inflation over the long term. And one of the as I was doing in the poll earlier, you guys mentioned that you want to generate returns that can outperform inflation. So having cash is one thing, but I guess what I also want to emphasize is the importance of having a plan to invest over the long term. So that's how I would want to kind of end today's presentation. Um, and before we go into Q&A, of course, as usual, I have this QR code here that is more of a little token of appreciation for those of you who have attended today's webinar. This is a code that you can scan, and this gives you a discount on your investments with Stashaway, where your first 50,000 you invest with us for 3 months is for free. So this applies to the investment portfolios, not on the Stashaway Simple ones. So I'll leave this here before and as we go into Q&A itself. Whether it's for myself or Wong, please feel free to post some questions here. So I guess there's one question that I have here. This is more specifically from myself, Stashaway, or directed to Stashaway, is that can one who is invested into the general investing portfolio now switch to cash, whether it's ringgit or USD during high volatility? And the answer is yes. So on Stashaway side, you are able um, to I guess perform a transfer from one portfolio, which is say your general investing portfolio, to Stashaway Simple if you want to keep it in ringgit, or USD Cashew, which is another portfolio, assuming you want to keep it in US dollars. So that option is always there. And then once you have put it into either Stashaway Simple or the USD Cashew, then you are able to do what we call dollar cost averaging, so like setting a recurring transfer from there back into your investment portfolio. So that is available today already. So you can do that if you prefer not to ride through the volatility. But just be careful. If you're trying to time it also, it can be costly because as we've seen, especially over the last 1 month, 1 to 2 months, if the down moves and the up moves have been very sharp, so it can be quite costly if you miss out on trying to time those. Okay, so that's why from our side we are always advocating in terms of like long-term investing. Don't be too shaken out by what's been happening in the market. Time in the market is more important than trying to time the market lah. But we also do respect the fact that you want cash can putting your money in cash is also a way to help you sleep better at night lah. Okay. I guess one question here is also on, I guess more for yourself, Wong. Like, are you seeing any, or what are your clients doing right now, right, with regards to the various events that's happening around the world? Like, what are they doing with their money, essentially?
Okay. Yeah. It all depends, lah. Right. I mean, if you're talking about purely corporates or the institutional investors that we manage for them, right? Majority of them have diversification, right? Particularly those big insti funds, they do actually invest into both equity and also fixed income, but they are slowly looking to diversify into private assets, right?
Hmm.
I think first of all, because private assets have low volatility as compared to the public market, right? And I think that's where they want. But obviously, there will be those kind of illiquidity that you would face, especially for those private assets. While corporates, um, typically corporate investors are not. I think they are basically risk averse. They tend to prefer to invest into fixed income and money market funds, right? And then we have retail investors. Now, retail investors are obviously different type of animal because I guess they do take a higher amount of risk. So we are seeing a lot of the retail investors' preference is towards equity, right? And but we do slowly see a lot of retail investors moving into fixed income because of the low volatility and the income factor. I think lately we are seeing investors targeting income fund because first of all, if the fund are able to deliver a consistent income for their investment, I think that's where they are quite keen to invest with us. So I think that's what we are slowly seeing a lot of the those kind of investors are moving into. Yeah.
Maybe just to elaborate that point a bit further, when you say they're targeting an income fund, what kind of target returns are they looking at when it comes to these funds?
Yeah, yeah, yeah. Good question. I think depends on what type of fund. If you're looking at purely just the ringgit market itself, they are probably looking at between 3 to 5%, right? Obviously, looking at those different risk profile. But if you're talking about the global income fund, majority are looking at least 6% to 7%.
Hmm. Okay. 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 So I guess really depends what kind of an investor you are.
Mm-hmm. The risk
What
appetite that they have.
Yeah, what would be key, I guess, is having a diversified portfolio. And this is something that we as Stashaway have always been advocating to not overexposing yourself in any particular one area, whether if it's just solely equity or bonds, but ideally what you have should be diversified and also um, in line lah, with your risk appetite. So that is, I guess, the some words of wisdom for tonight itself.
Yeah.
I don't have any other questions from clients, but from the audience here. But if there's any other questions, more specifically for us on Stashaway, you can either schedule a call with our team here, or you can drop an email to us at support@stashaway.com, or .my, sorry. And I guess yeah, and we've kind of also approached the end of the 1 hour session. Um, yeah, I think that's it for tonight. Maybe a one big thank you to everyone who dialed in tonight. Also, thank you so much, Wong, for sharing your views on the Malaysian economy, and also on the global scene.
Yeah.
Thank you all
Welcome. Thanks.
again tonight
Yeah.
for this
Thanks for
session.
having me, Albert. Thank you.
Okay. All right then.
Right.
Take care, everybody. Have a good
Okay.
night, and
Thanks. Good night. Bye.
thank you.